Hi there. Welcome to today's Monday Minute, hosted by the Canadian Leadership Congress. It's my great pleasure to be here today with Jaap van Dam, who's Principal Director of Investment Strategy with PGGM in the Netherlands. And Jaap is also the author of Investment Excellence, which is a fantastic book. And I recommend that all of you read it, especially in these challenging times. Please welcome Jaap. Hi, how are you, Jaap?
Caroline, very good to see you. It's great to be here. I think we're something like 5,000 miles apart, but this seems to be working very well. Very happy to be here.
Yeah, well, we're very happy to have you. And I just wanted to start by asking how you're doing and how COVID-19 is changing things up in terms of how you work.
Yeah, so I think more or less I've adapted after, what is it, seven or 8 months. And so I think I'm doing great. It took some readjustment, of course. And well, e-life can be a bit monotonous every now and then, but by and large, I think I should say everything is fine. And I also, I firmly decided that this is life for now. So let's not fantasize about a different or another life. And then I think so there are probably two things I really miss. Typically within my organization, I like to walk around, connect different departments to each other. For example, connect the board to the actual investment people, et cetera, et cetera. That the physical meeting with people is an important part of, I think, which is important. So that's a bit difficult. And the other thing I miss a lot is my international network. I very much enjoy exchanging thoughts internationally, being immersed in conferences so that you can really zoom into what others are doing. And that's also something, but I expect that some of that will reemerge somewhere in the next year. So that's great.
Well, we're certainly hoping October for our International Best Practices Forum. And can't wait to have you there as part of our advisory board. Look, in your book, Investment Excellence, which I referenced at the beginning of our conversation, you talk about the importance of goal setting to plan governance. And I think that is such an important message, and we don't talk about it enough. Has the pandemic changed your views in this regard? Do you have additional comments on that topic?
So perhaps additional comments, yes. And I think change, no. Perhaps a reinforcement. I think if you look at our book, then a very important part of that is that in its function, boards and board investment committees should have the right distance, the right altitude, and the right horizon in order to steer the actual investment process in a strategical sense. And I think if you look at the COVID crisis, then there's an important message in the sense that keeping this distance will probably have kept you away from mistakes. For example, in the first 1 or 2 months, it would have been very easy to say, okay, we should change our policy, we shouldn't rebalance, we should think about the consequences for stock markets, et cetera, et cetera. And now after 6-7 months, now the dust is starting to settle. You can see already that it's very wise not to touch your strategy in these very, very stressful circumstances. In other words, it was very good to set your goals beforehand, to set a firm strategy, to give a good mandate to the actual investment management organization or your fiduciary investor, and then be a bit hands-off. You should be involved a lot, but don't touch the strategy when you shouldn't, when it should be implemented. And the second part, I think, is and this again goes to the settling of the dust. I think the COVID crisis, and I think we'll touch upon that later in this conversation, has brought to the table some very important strategic questions again. The first one probably is how are we going to generate sufficient returns over the next decade, because the bond yields have come lower again and again. So it will be increasingly difficult to forward looking to harvest the right returns. But also, we feel that in the Netherlands and in Europe a lot, and I'm looking forward whether that's also the question in Canada, but what we see here, I think, is a changing balance between investors and companies and what society asks of them. And I think more and more the question of society to companies and to investors is, what will you be contributing going forward to the different crises that we're in? For example, climate change, biodiversity, but also I would say things like the Black Lives Matter movement, etc., etc. So, what will you be contributing? And I think that leads to significant questions that should be raised by a board, and that might lead to different objectives than you would have formulated even a year ago.
Okay, let's tuck into that a little bit. You've talked about shifting objectives, climate change, Black Lives Matter, some of the societal issues that have really risen to the surface over the last few months. What goals then should pension funds be looking to set over the next couple of years, or how should they be looking to shift their goals or evolve their goals?
Yeah. So perhaps it's worth going back a bit to, let's say, the last 3 or 4 decades. I think if you look at those decades, then predominantly the key message in economics and in investing was maximize the returns that you harvest, and do that by let's call it by the neoclassical model. So broad international diversification, only a look to return and risk, and in a certain sense saying, well, all the other problems of humanity, they should be solved by somebody else. And I think that was to a large part also facilitated by a political system and economic system which said, yes, this is the right recipe to solve these problems. And I think that I see it more and more, that on the one side, we as investors are to a certain extent part of the problem. I mean, typically we wouldn't make a lot of difference between, for example, investing money into, let's call it very dirty carbon emitting companies or clean carbon companies. We only look at the world through the lens of risk and return. And I think that the demand of the world there is changing. And to the other side, so that's the question of the negative externalities that you might be generating as a consequence partly of how you invest. And perhaps the even bigger question, and there may be differences in interpretation there in the different parts of the world, I think is more and more, the question is also being asked, can you be a force to the good? And then, for example, you come into the realm of SDG investing, impact. What can you do with your asset allocation to change the world for the good? And both, I think, are coming into account quite rapidly. And I wouldn't be surprised if there would be huge changes in the way that people look at companies and investors in the next 5 to 10 years.
Yeah, that's a really important part. I guess from the standpoint of pension investors right now, we're seeing headlines about massive debt levels around the world, especially on the part of governments and in the wake of COVID. As a pension investor, how do you balance, the reality that interest rates are in, they're very low, economies are in really poor shape, and yet, we want to move ahead and balance out some of these greater goals. Is there a trade-off here, or how do you talk about that in the context of returns?
So that's the famous trade-off question. And I get that a lot lately. So I would say roughly, my first remark should be, I think, there is no law of nature which says you will do well by doing good. This is perhaps disappointing, but I'm afraid that's the harsh reality. So I tend to think of investment outcomes through two dimensions. One is the purely financial dimensions. How much return per unit of risk are you harvesting? And the other one may be the societal dimension. Are you detracting from society at large, or are you contributing? And then I think there's probably a large zone in which you can just harvest your returns and not do bad to society. So that's very good. That's a zone that you probably should be in. And I think there also will be a zone in which you can actually do well and do good at the same time. And for example, if you look at climate change, then I think the momentum when it comes to climate change is so enormous now that if you would go against the grain of this movement, you would probably be destroying capital by being in assets that will become increasingly stranded assets for too long a term, and you can join and help realize the transition by allocating capital to where that's happening. Just to give you an example, the European Union has last week announced that they want to increase the capacity of wind electricity generation in Europe by 25-fold in the next, I think, 15 years. So there's a lot of capital needed there, and I think we should be part of that, and we will be rewarded for being there. And also this might be sobering. I think you probably investment by investment, you will have to investigate very thoroughly what it will bring in terms of just, let's call it, classical financial returns, and what will be the detriment or the increment to society. And again, no law of nature, so you should do your due diligence very, very well there.
Yeah, no, absolutely. Now, you recently commented that pension funds really need to understand and consider politics again. There's a lot happening on the political scene globally, but why again do you think that's so important right now?
Yeah, I think this goes a bit deeper into the remark we just made a couple of your questions ago. So looking back for the past few decades, it was politics hands off, somehow the invisible hand or the international economic order will generate welfare for everybody in this world. And I think to a certain extent that has been true. Probably 500 million, 1 billion people are lifted out of poverty, have been lifted out of poverty in the past 30, 40 years. And that's an incredible achievement. But the cost has also been very high, I would say, both in terms of climate change, but also in terms of local, social, perhaps inequality, which comes to the fore. And more, I think that's the zeitgeist, if you want to call it like that, is, well, politics will be taking a bigger part again going forward than they have been in the past 3 decades. So I think that means that economy will be more of political economy going forward, and I think understanding these forces and very carefully analyze them and understand what your license to operate is societally and in the way that you invest will be a bigger part of the puzzle going forward. So my the big remark is probably be aware of the fact that politics will be more important going forward than they have been in the past decades, and make sure you have the competences and the sensitivity on board to understand that and not go against the grain there, but be part of that movement.
Yeah, so global politics is definitely sort of a source of investment volatility right now. But let's look at the big push to globalization. You know, so many pension funds, particularly here in Canada, have, pivoted their focus to countries around the world, even opening up
Yeah.
offices, in Europe and Asia. But you've recently commented that the home turf really needs to be put in clear focus as well and should not be ignored. Can you tell us why you think that right now? It seems to go against that sort of globalizing grain a little bit, doesn't it?
Yeah. Yeah, a couple of remarks. Perhaps I am starting very much from a Dutch perspective here, so feel free to adapt to the local. But reality in the Netherlands is that we have very much been investing through the idea that you should allocate according to capital weightings or GDP weightings when you talk about your return generating investments. And for the Netherlands, that means that our basic weight is, I think, something like one percentage point of the total investments when it comes to return generating assets. And then if we come to 3 or 5, then in the Netherlands, typically we will be saying, oh, well, this is concentration risk, that kind of very technical ways of looking at the world. And my remark to that would be that in a certain sense, we in the Netherlands have saved something like 2 times GDP through the pension system. And the pension system, to a very large part, is a compulsory system. So all these savers in the Dutch system haven't brought their premiums to PGGM because they think Jaap van Dam is a great investor, but to a large extent because they have to. And there I would argue that all this pensions money, in a certain sense, is a kind of a national savings pot. And there I think you should also be looking at what these savings do, not only in financial terms, but also in societal terms for the actual savers in the system. And then I think sometimes you can at least harvest the same financial returns close to home, while you at the same time generate a better societal return for your beneficiaries. So my plea is, let's open our eyes for that part of the puzzle, and let's do that. And perhaps on top of that, it's becoming increasingly clear, for example, in recent research by Elroy Dimson, that engaging with local companies can be more effective than engaging with companies far from home. And that's probably because you understand the culture, because you can have very close connections to the people governing these companies, et cetera, et cetera. So if we would all take around the globe as asset owners our home turf very serious also in terms of governance, of allocation, then the sum of what we do around the globe might be a bigger sum than we achieve right now today.
Great. So, on the topic of sustainability, you had some great comments up front about that. We looking at the pandemic, what conversations are you having with other asset owners about what they see as the risks around sustainability, and are there opportunities that maybe we're not really looking at right now?
Concrete opportunities, I wouldn't be aware of, but so when the pandemic hit, my first and second thought was this will distract a lot from things like climate change, loss of biodiversity, et cetera, et cetera. And so I thought, well, let's see. And to my surprise, and I think we share this surprise with investors around the world, but also with with NGOs and economists, et cetera, et cetera. To my surprise, the interpretation of the crisis seems to be, okay, this is a clear sign of the fact that we're running against the borders of what the planet can bear, with COVID, and it seems to act as a catalyst to think more about both the E side of things, climate change, and for example, talking about the green recovery is a very big thing here in Europe. Also the social element, also by Black Lives Matter, but also by taking care of the people who really are hurt in the COVID crisis. So it seems to act as a catalyst. And if you combine that with the enormous pots of money that governments around the world are willing to invest and spend right now, and they seem to prefer green investments over just broadly stimulating the economy, I think this might be helping to get to the tipping point to green investment. So my advice, I don't have very concrete, you should spend your money here, but my invitation is be prepared for the opportunities that will unfold, because the clock is moving faster than it was before.
That's great. Well, look, I'd like to circle back to your book, Investment Excellence.
Okay.
You've got some great ideas for pension boards and some thoughts on how to build good governance. But from the perspective of plan management or asset owner management, communicating to boards can be challenging. The business of running a pension plan is complex. Do you have a couple of tips that you can share with our Canadian audience on how best to clearly communicate sort of some of the challenges that are in front of us right now to pension boards?
Yeah. So communication to the investor. Well, it can be challenging to get the right conversation with the board. And probably my first advice would be always take your board extremely serious. But to have a mature conversation, sometimes you have to influence the agenda to a certain amount. And so, for example, one of the advices in our book is for the board to reserve at least 20% of its time annual to strategic questions. So in times like these, I think it might be time to prepare a very strategic session, I don't know, towards the end of the year or beginning next year, where you try to address these questions that we've been talking about. And perhaps another thing would be that, of course, if it's me talking again to the board, they'll say, okay, here comes Jaap again with his list of 3 or 4 things that are always close to. So my second advice would probably be, dear board, open up the windows and also get external input. And that may be threatening to the investors, actually. Sometimes it may feel threatening, but I think if you can help your board with having an open-minded view of the world, and you accept the fact that you are not the only channel by which that should happen, I think that also can lead to very rich conversations. This might also come in the form, for example, of a peer conversation. Why not sit around the table electronically, perhaps, with the investment committee of a peer? It may be that you ask independent experts, etc., etc. But open your windows and then rethink your strategy, and then come back to the conversation that you have on a more daily basis.
I like that idea. I like the idea of opening the windows, and I really like the idea of opening up dialogues with other investment committees as well. I think that's great. Jaap, thank you so much for your time. I so appreciate it. This has been a terrific conversation. Thanks to everyone who has been able to join the Canadian Leadership Congress and to listen to this Monday Minute. And we hope to see you again soon. Thank you so much.
Thank you very much, Caroline. Bye.